Would you be okay with being bought out?
We're probably not okay. We're not looking at selling off to a competitor or to anybody else. I think from the very beginning.
Global online giant came calling. What would Flipkart's response be?
We have been building a long-term sustainable organization, and not just a quick business which we scale up quickly and then sell it off. I think that's not what our strategy has been from the very beginning. We want to build a long-term sustainable business. Our dream today is to build one of the best and the largest organizations of India.
Well, we're not looking at selling off to anyone, said Sachin Bansal in 2012. Clearly, a lot has changed in 6 years. India's e-commerce industry is at the cusp of a tectonic shift India's startup world is facing, and there's no other way to describe it, a bittersweet moment. Flipkart, the most successful homegrown e-commerce company and the market leader, is all set to be acquired by US retail giant Walmart in a $15 billion deal. The announcement is going to happen tomorrow. So here is what exactly is happening. Walmart and Flipkart will sign a definitive agreement as early as tomorrow. Walmart is likely to buy a 75% stake in Flipkart for $15 billion. That is taking the valuation of Flipkart to about $20 billion. This will make it the US retail giant's largest e-commerce acquisition to date, and this is also possibly one of India's largest FDI deals. Now, Walmart is planning to pump in about $2 billion in fresh funding. Sources say the Walmart fund deal will come in by way of cash in hand as well as newly issued debt. Walmart is also in talks with potential investors, even as it plans to hold on to a majority stake in Flipkart. Sources say SoftBank's exit could pave the way for Google's entry. Not just that, existing shareholders Tencent and Tiger Global will back the team at Flipkart and will also get board representation. Sources say Walmart could also take Flipkart public, and a potential listing through an initial public offering is on the anvil, but that probably is a few years down the line. Walmart CEO Doug McMillon will be in India to close the deal. CNBC TV 18 learns that Flipkart's current leadership team, and that includes Binny Bansal and Kalyan Krishnamurthy, will stay on, while Sachin Bansal, the other co-founder, will move on. Now, CNBC TV 18 learns the decision to go with Walmart over Amazon was also linked to the US giant's assurance to let Flipkart continue to operate pretty much as is and hold on to its brands on the front end. Also, the promise of an eventual IPO, which has long been talked about but has remained elusive, was part of the sweetener. So the big question, what exactly got Walmart interested in Flipkart? Well, one thing is certain. Flipkart is not just an investment for Walmart in India. It is Walmart's ticket to ride on the thriving landscape of Indian commerce, not just e-commerce, but retail in general. Walmart currently operates 21 cash-and-carry stores in India and has a B2B e-commerce presence as well, which is likely to get a significant fillip post the Flipkart deal. The Flipkart investment is also part of Walmart's strategy globally to grow international markets. Now, Walmart's investments, which include $2 billion in new equity funding, will aid Flipkart's expansion and growth. So why is Flipkart selling out? Well, the company has a strong online presence but has been making efforts to strengthen its offline play as well. And of course, there's been fierce competition from the likes of Amazon. So with this deal, Flipkart will look at leveraging Walmart's retail expertise and its knowledge of the grocery and merchandise supply chain management. The investment by Walmart will also help Flipkart build retail infrastructure, especially in rural India, and also set up an agricultural supply chain. We understand that food is likely to be a big play when the Walmart-Flipkart deal is inked. We learned that Flipkart sellers will get the opportunity to access potential export markets through Walmart's global supply chain. Walmart would also provide Flipkart's private labels access to global markets. So now you may wonder, what the big deal is here and why should you care? Well, according to a report by Morgan Stanley, the volume of India's online shoppers is likely to grow by 50% by 2026. Many experts believe that 2019 will be critical for the e-commerce market in India. So where does the government stand on the Walmart-Flipkart deal? I posed this very question to the Economic Affairs Secretary S.C. Garg a few days back. Here's what he had to say.
I have no view on it. This is permissible under the FDI regime in the country, and as long as the players act according to that, that is for them to take decisions between them. The government, I don't think, has any view on it.
Well, that is the Economic Affairs Secretary saying if they're in compliance, we have no issue. The government has no view. Remember, under the FDI regulations, 100% through the automatic route is allowed in the marketplace model. Joining us now to discuss the implications of the Walmart-Flipkart deal are a panel of eminent experts, former DIPP Secretary Ajay Dua, Avnish Bajaj of Matrix Partners, Ashish Kashyap, the founder and former CEO of Ibibo, Harish Bijur, brand consultant, Harminder Shani of Wazir Advisors. Gentlemen, appreciate you joining us here on the show. Mr. Dua, let me start by asking you, you've seen the many twists and turns when it comes to retail, whether it was e-commerce, multi-brand retail, the many U-turns that we've seen, with respect to policy. But given the fact that Walmart is now going to be investing in Flipkart, and of course the transaction happens at a Singapore level, we just heard there from the Economic Affairs Secretary that this is unlikely to run foul of any regulation. At least that is the expectation at this point in time. Do you believe that this is a deal that is unlikely to face any sort of litigation, at least when it comes to possible FDI regulations?
I would tend to agree with the Economic Affairs Secretary, primarily for two reasons. One, we are talking about Flipkart, which might have its operations in India, but it is, as of now, a publicly listed company. I would say a public company, not listed, a public company in Singapore. It is trying to become a private company by reducing the number of shareholders or investors to below 50 is a separate exercise which is going on so that it becomes private, and in which case the compliance requirements in Singapore, corporate compliance requirements, would be fewer. Having said that, I think we need to be very clear that as of now in e-commerce, the e-commerce platforms in India can attract any amount of foreign investment. That's the law of the land.
Yes.
The FDI FEMA regulations. And on top of it, we are dealing with a company which is out of Singapore, not in India, only operations are in India. Having said that, I think the way Walmart is planning it, from at least the media reports which have come about, we will know the final picture only tomorrow, that it's going to be gradually increasing its stake. It could be starting with the $3 billion worth of extra, the new stock being offered to them, and maybe Google's parent company will also subscribe to it. But this is all permissible. Going on, who wins? The existing shareholders led by, I shouldn't call it led, the largest of it being SoftBank. Then you've got Tiger Global.
Yes.
You've got Excel. You've also got Nesper. All these companies are probably preferring to deal with Walmart, though at one point of time it did look that Amazon was also talking to Flipkart. That probably wasn't looked at very well by these investors who I talked about, and that seems to have also forced the hands of SoftBank to go along with the other holders rather than to try and get a better price of Amazon. Because for Amazon, India has been a very successful geography to operate in.
Sure.
And Walmart coming in here means extra or higher competition for Amazon, because Walmart is probably the only group in the world which can has the financial muscle, which has the technology muscle,
Sure.
which has the sourcing and the product diversity about which Amazon could be concerned.
Yeah, you're right on what Walmart brings to the table, but it doesn't necessarily bring e-commerce strengths to the table, because in fact that has been one of the weaknesses for Walmart, even in its home base. But let me go across to Avnish Bajaj of Matrix India. Avnish, thanks very much for joining us. What do you make of the fact that we are going to see this coming together of Walmart and Flipkart, and why do you believe Flipkart decided to go with Walmart over Amazon? Of course, it's conjecture, but outside of the investor interest, do you believe that it's a better fit for Walmart? Because, as we're given to understand, they will allow Flipkart to operate pretty much as is. They will allow them to retain their front-end brands. It gives Flipkart sellers access to the global supply chain of Walmart. It also gives Flipkart the opportunity to take its private labels global. So what do you believe is the sweetener on why Flipkart decided to go with Walmart?
Thank you for having me, Shireen, and I'd like to congratulate Sachin, Binny, and Kalyan. 2 years ago, we were having debates about Flipkart versus Amazon and whether Flipkart would survive. So I think they have thrived, and kudos to them. Little bit of history to answer your question. I think the answer is brand and independence. If you remember, we had sold Bazi to eBay India, which became Flipkart, which now is part of Walmart. Who would have thunk it that would be the journey? The one regret I have is that we didn't keep our brand. And there is this angle we are all talking about bittersweet, and there is this narrative about are we going to be a colony of the US or China? The reality is our ultimate car icon company is Maruti, and it's owned by the Japanese, right? So I don't think it's about the ownership. I think we should be very, very proud that two Indian entrepreneurs withstood the onslaught and won. My view, it's a conjecture.
Yeah.
I haven't spoken to Sachin or Binny, but my view is the independence and the brand you mentioned. And of course, to some extent with the CCI issues potentially with Amazon. But if I were in their shoes, that's what I would have done. Once you're competing head-on with somebody for a very long period of time, you want to retain that independence. You want to leave a legacy. And I think having your own company name is the legacy.
You're right. That is what we're given to understand. And we've been reporting that the front-end brands will remain distinct. They will continue to operate as is. The synergies are largely going to be on the back end. Ashish Kashyap, the founder and former CEO of Ibibo, also with us. Ashish, you know a thing or two about what investors decide to do with companies once they put big money in. What is your reading of the Walmart-Flipkart story, and how do you see the competitive landscape changing? I mean, this is now going to be Bezos versus Walmart.
So multiple questions. Firstly, thanks, Shireen, for having me over. So I think it's firstly absolutely a very momentous moment for the industry at an overall, because it clearly demonstrates giving returns to investors. Investors invest in assets to create returns over the long term. And I think that's demonstrated, and that's going to be really good for the next decade and the next set of entrepreneurs. I think that's the first thing. On the second aspect, my sense is, at stages when investors definitely want to create returns and want to create exits, and a number of them did want to, they want to also look at the possibility of a culmination of a deal. Now, I don't know the insights, but my sense is that the conversion, with Amazon could have been a more lengthy process. My sense is that it's a little less about the identity, because in any case, Flipkart, while in the new construct will retain its identity, but it's the founders and the entrepreneurs are not really running that company. It's being run by professionals. So I think it's more to do with the possibility of a conversion and the deal terms. And, who knows, Amazon could be, in any case, pushing the accelerator to increase the cost to their fiercest competitor to enter into the market. So I think that's really the way I look at it in a different sense. So I think in general, but it's really good for the environment. I think all of us as producers and creators of companies, we need to give back returns to our investors, and I think that's getting played out, and that's just beautiful. I mean, I look forward to the next decade.
As with the rest of us. But let me go across to Harminder Shani of Wazir Advisors. Harminder, we were just talking about the opportunities, and we just quoted those numbers that we are expecting this market to see a 50% growth by 2026. That's what Walmart seems to be betting on. My understanding is that they've already factored in headwinds in the near term when it comes to the EPS, but they hope that eventually this will be EPS accretive given the opportunities that they see here in India. They're also hoping that, they haven't been able to do much in India so far. They've got about 21 cash and carry stores, but with this marriage with Flipkart, so to speak, they hope to be able to not just enhance the e-commerce play, but also then feed in to the offline play as well. So how do you read this, Harminder, and what will it mean now as far as India's retail market is concerned?
So Shireen, I have actually been maintaining, talking to some other people also, that what Walmart is not buying what Flipkart has achieved so far, but Walmart is bought it for the reasons what they want to achieve in the future. Because I think looking ahead, how the e-commerce numbers are going to unfold, that's only a subset of overall consumption story in India. And looking at the way the economy is growing and overall consumption story is growing, I think that's what Walmart is betting on. They have been here for more than 10 years. And given that they have been restricted because of policy issues and they have a very small cash and carry business, which normally they don't even run anywhere else in the world. So now this is the opportunity for them to directly deal with the Indian consumer, get into the retail market. And if they're anywhere else other than US, they could build another $500 billion business. Either it's here or it's in China. And I think China is not the story which unfolded well for them. So India is a place. So their options would have been, if they were allowed to, either to go after some Indian offline retailer or go after this online retailer. So I think they bet it on the future, and that's where they are coming through it. So when I'm saying betting on the future, I didn't mean the future group, which they could have, and they could have taken offline strides in that space with that manner. But in this case, they have really, really gone after the future consumption patterns, and they have picked up the right company. And just to add this point that what it means for Flipkart, I think Flipkart now really gets to play against Amazon on a level playing field, because now they also have a pipeline to an unlimited pool of money like Amazon had. They didn't have to. They don't. Flipkart team doesn't have to every time now to go after looking for investors or wondering whether they'll be able to give the returns when the IPO is going to happen. Now it's really a level playing field between Amazon and Walmart via Flipkart. And I think it's going to be a fantastic play to watch. But so far the journey has been really great, and I think one unfolding which I'm hearing to other people also, and when we say that investors invest and they need an exit, but look at US market or even China, most of the founders, they still own their companies. They still are the ones who are running it, the larger ones and the successful ones we are talking about. It would have been so great to Flipkart still being run by the founders, but that didn't happen, and I think that's where some of the laws in India allowing differential kind of stock options, class A, B, and C, etc. I think that's something which somebody should be paying attention to. That otherwise, the next phase again will be the same. We'll create companies, we'll give money to investors, and give companies to international companies.
The likes of Deep Kalra and many others have been raising the exact issue that you've brought up. In fact, we understand that Bhavish Agarwal of Ola is also looking at exactly this situation. How do Indian founders continue to hold on to the companies that they started, even though investment is required and investment is coming in at this point in time? But let me bring in Harish Bijur, brand consultant. Harish, thanks very much for joining us. Flipkart, the brand will continue. The private label brands will continue. Myntra, Jabong are likely to continue as well. And these will also perhaps now get a global play using the Walmart supply chain as well as using the Walmart platform globally. What does this deal mean to you, Harish? How do you read the significance and the importance of this deal from an Indian retail perspective?
Well, firstly, when I really look at the number, of $20 billion US, I mean, it looks such a close number to the $19 billion US, which Facebook paid for its best acquisition, which was WhatsApp. So there seems to be some magic in this number, 19 billion, 20 billion. What is Walmart getting? I think it's getting a toehold into the Indian market. And I really call it a toehold because, I don't think even the layer one of the opportunity for e-commerce has been scraped by entities within the Indian context, which includes Flipkart, which is one of the players. So it does give an ability for Walmart to be an omni-channel play as far as this country is concerned. India is a very important market. You cannot ignore this market. You have to be in this market. And you have to be in this market with several avatars.
Okay, we're running out of time, but Mr. Dua, let me end by asking you, and gentlemen, we're booking you for tomorrow because that is when the deal will be announced, so we'll have much more granularity on the details, and we hope to speak with you tomorrow. But I'll end by asking you, Mr. Dua, we've already seen, Kate, etc., the traders' associations up in arms asking the government to not allow this deal to go through. Do you believe that there could be any trouble on account of that kind of noise?
I'm not sure whether there is much merit in what Mr. Khandelwal of Kate is pointing out. He certainly has a point when he says that the organized retail, unorganized retail would get impacted by e-commerce. But that's the law of the land. E-commerce is allowed. It was in the country, and it wasn't with Walmart, but it were other investors. So to that point, to that extent, I think there is not much merit or not much ground for the government to intervene.
Okay.
But I think what Walmart will have to watch out is more in terms of the tax implications of the acquisitions of shares which it is going to be making. Yes. We've had this case of Vodafone, which, of course, the courts gave a ruling about it not possible to do it retrospectively. But since then, we've had some treaties, grandfathering treaties, exemption treaties with particularly Mauritius, and then followed them suit elsewhere.
Yes.
The deal, to my mind, actually fructifying in the ground, it might get announced tomorrow, could be spread out over time, including if some of the investors, existing investors, want to pass on the benefit of having remained in the long term in the Flipkart, because the short-term taxation rates and the long-term taxation rates are different. So I do see that announcement certainly taking place, but actually all the share exchanges taking place, money coming in, could take some time. And to that extent, I think what we are going to be seeing is building up of Flipkart, but not transformational change taking place overnight, merely because some investors have been replaced by Walmart.
Oh, absolutely. I don't think anybody is expecting any transformational change overnight, and you're absolutely right. The big elephant in the room is going to be taxation. That is one of the key concerns, not just for the likes of Walmart, but also for the likes of SoftBank. And you're absolutely right that is a consideration that is being weighed at this point in time. As I promised, gentlemen, we're booking you for tomorrow, so see you when the details are announced. We're given to understand that it will be made official tomorrow. Ashish, Abneesh, Harminder, Mr. Dua, thanks very much for joining us on the CNBC TV 18 special break. We will return with a lot more. Don't go anywhere.